sucks. Well, guys, welcome to the PM stream recording. I think this is stream recap number 270 something. Uh, just getting the recording started now. Don't worry, you guys didn't miss too much. Oh, really, MM? Okay. Yeah, exactly. It's just the cycle. You just have to weather the storm. That's a good one. Yeah, guys, honestly, the reason why well, I actually show you guys payouts, but the reason why I haven't shown you guys all my payouts is because some of them are for clients, and I don't want to show off my clients' assets or accounts. That's a good one. I'm gonna start using that one. That's a very good one. Would it be possible for you to check your DM? I just checked it. Yeah, I just sent you a reply. Welcome. Thank you for joining, man. I hope I was able to answer some of your questions already. But yeah, if you have more questions, please ask. Okay, so kind of death candling inside the macro. We have this 1 minute here. Mechanically looks very, very nice. Uh, Here's what I'll do. I'll probably take this with a micro, guys, just so you know. I mean, there's not a lot of risk on this play, like maybe 15 points at the worst, and we're not bearish at all, so this would be like a B setup. But I think it'd be cool to see it work. This is a good reaction. We have an SMT, we have a singular gap here, and maybe if we like really knife down here, I can like add to the position. But that's not a good close, so unfortunately I can't enter. Um, it's dangerous to start mentioning clients. Hmm. Well, maybe I don't have clients then. I don't know. Yeah, I got to get my series 67, right? And then I can start talking like that. All right. So, I guess 1 minute inverse here. So, gonna take a stab, I guess. Not too much size. Now obviously it's a little bit bigger of a stop, but still like worst case scenario, I guess 25 points. I guess I'm willing to risk that. Like I said, this is like at best like a B setup. Um, I like how it looks mechanically though, so I'm just trying it. I like the macro time. I suppose that would be your break even. It's really close to the entry, but honestly, in a bullish trend day, I feel like it makes sense to go break even there. So probably going to be a break even trade unless we death candle here, which is basically what I was hoping for when I entered this position initially. So hoping for the best, expecting the worst. Probably will TP at lunch lows if we get it. I imagine we need to come back and balance the inefficiencies we left. So this would have to be very lucky to work. Lunch low here is going to be 105. Maybe I'll just take off at low hanging fruit at 140. And it's a break even trade. So it doesn't matter. Is this low protected? Which low? I don't think so. All right, so now we can monitor the 5 minute. If we close through both of these gaps, I'll think we'll be due for a little retracement maybe. I'm not sure if the break-even year will save us. I just didn't want to be holding into a bullish for value gap, especially when we've been in a bullish trend day, you know? Yes, MM. No question is stupid. No question is stupid. Would the 2 and 3 minute be considered an SMR? Nah, because that's not really a breaker block. I mean, I guess this is a CISD, but yeah, it's just not a good SMR. So basically, if we get a pump slash dump kind of day and we are running liquidity, how can we get an A class short slash long? In a bullish trend day, you can't. The only way that you can is if you have a good draw on liquidity, like B or greater, and you pair that with like a lot of confirmation. So essentially, the only way that we could get a reversal setup is if we see an inverse play out, and then we get a confirmation setup off that inverse, or we inverse every bullish PD array in a price leg that allows us the opportunity to enter there and go break even at the low of that price leg. So like in this example here, this is like a gamble, right? We don't know if this setup is going to work as a short until we break an obvious bullish for value gap, which in this case would be our condition, this 5 minute, okay? And when we break this 5 minute inverse, that will take us to this low, which is where we can go break even. What if it was a retracement? This play, like I said, I have no idea if this is going to be a retracement. When the 1 minute closes here, I have some conviction that we'll run at least to this low, which is why I entered it, hoping that the rest of price would break down, but knowing that it would most likely be a break even. So yes, in most cases on a bullish trend day, it'll be a reversal. Now, if we get, or not a reversal, sorry, a retracement. Now, if we get the inverse here, though, it that tells me that this is not a retracement and that this is actually a reversal because we've inversed this first bullish PD array. We've put in bearish PD arrays in the form of the CISD. We violated all of those order blocks, and we're also violating all of these for value gaps. So to me, that would be more bearish than bullish and would signal the reversal. We need not necessarily the greater than 5 minute time frame to inverse. We just need the bullish or bearish for value gap that's representing price as our condition to be broken, right? So every time I come into stream, I'm going to mark out some for value gap that's holding price, and that to me is going to be our bullish or bearish condition. In fact, there's a whole diagram that Dodgy actually created that kind of goes more into detail on this. And this is essentially the idea, okay? Order flow never changes here. However, market structure does. Market structure meaning like, okay, we make lower lows, higher lows, etc. It's not a good idea to take a trade unless order flow and market structure align. So what that means is in today, and like what we're talking about today, it more is you want order flow and drawn liquidity to align. Um, because market structure doesn't really always give us the optimal entry for the IFEG model, right? We don't always need a market structure shift when we take an IFEG, and we also don't really want to be taking an IFEG after a market structure shift usually because they're going to be too low in the range. So it's actually better if market structure doesn't really align, but you want drawn liquidity to align, and that's what's more important. So you can kind of ignore this. This is an older document. This is like almost 3 years old now. Order flow and market structure on the lower time frame, because of when he says respection, he means like delivery from bearish for value gaps switches bearish here only for scalps, however, does not align with higher time frame order flow. So like in today's example, taking this 1 minute short here, this would only be good for scalps because it doesn't align with the higher time frame bullish order flow, okay? So right here, when we break this, throughout this whole sequence, order flow and market structure change at various times in the 1 minute, however, it never really changes in the higher time frame. So this is our 5 minute bullish gap. This is like our condition, okay? So it depends on this one. This will tell us, okay, if this breaks, we're bearish now. It's hard to go heavy in shorts until order flow changes, 5-minute bullish FEG gets violated, or textbook bearish OB forms. So the textbook bearish OB forming would be like momentum happening, right? That like tells us that price is going to become very bearish here. So kind of what we talked about earlier, how you either need to wait for all time frames to break and that bearish order flow to be confirmed as broken, the condition breaking, or you need a lot of momentum. And right now I'm just representing that idea on the chart as this 5-minute gap, which we've seen how hold once now and now twice, and this 1-minute breaking as like the scalp condition entry. Okay. Yeah, for sure, man. Oh yeah, G28. Sorry, this was a break-even trade. So the entry for the short here would have been here, and then when we swipe out the low, you put your stop to break even. Okay? And then if price comes back up, then it's a break-even trade. And that's just the model, right? We're looking for a liquidity sweep, a singular gap, an inverse. When price takes the low of the swing that we're inversing, that's when you go to break even. And then your stop out is if we close back above the inverse for value gap. Sometimes we'll create these things called inception gaps, and what those are for value gaps that are created on the swing that's inversing the for value gap. So this one here, and usually you want to put your stop above that. So do you see here the discrepancy where if price, obviously there's a little tiny 1 minute up here, but we'll ignore it for now. If price were to close back above this would be your stop out, but technically there's a little bearish for value gap here that could also hold, so you'd include that in your stop loss. So this is our inception gap. Okay. And then the IFVG is where you normally put your stop loss if there's no inception gap. Meaning if we close back above the IFVG, that's where you'd stop out. So in normal cases, if you imagine this inception gap isn't here, you would just stop out here. And then in bad price conditions, with good draws and liquidity, sometimes we'll put our stop losses at the high or the low. But those are very rare. Less than 1% of trades, I feel like. Am I taking anything? I'm probably not taking anything for the moment. But I don't know. I guess we'll see. I just watched a submarine sink an Iranian frigate. That's pretty crazy. Through the periscope. Now, rethinking this trade, I judged it had delivery off of FEG plus momentum and good IFEG. Isn't that enough to beat target? Okay. So 30-second long. This is not good momentum, in my opinion, in the context of the chart. Like, yes, 5 points per minute is supposed to be considered good, but when every swing is 45 points and it only takes a matter of minutes, it's not good. And then this isn't obvious. And then to me, the draw on liquidity here, while yes it is B, it's not like it's not a good enough target. Like I don't know how to describe it. Like you want like I feel like in a way you want time frame alignment here. And in order to confirm that this is going to go another 300 points, you need to see like a bigger move than a 30-second entry. Like you know what I mean? Like you want your time frames to align here. You want your draw liquidity to align. So am I going to expect a 30-second inverse to take me up to a daily target? You were targeting the 4 hour. Okay. Fair enough. This to me, I guess, is a decent draw. I don't know. It's just okay. That sucks, Seb. Like, I don't know. Like, let's go back to that graphic, because maybe that'll help me kind of describe it a little better. It's like this idea, right? Oh, it's not letting me. Oh, because it's way too large. Okay. Well, that's fine. I can open link. So like here, okay. Higher time frame unfilled gaps. Good IFEG. Okay, so we want a good one here. This to me is not a good IFEG. Okay, because there's no liquidity sweep. And yes, good IFEG means like just like decent, but you need sweep or SMT. There's no sweep or SMT here, right? Or at least I don't think there's an SMT. I could be wrong. Let me check. I think the key thing here, I think the biggest thing though is just time or momentum. Did we have time here? No time, and I don't think this is good momentum. I don't know. I don't know. It's subjective. It's subjective. I think at the end of the day, like a lot of these things can be defined more subjectively in live time, and this to me subjectively just does not look good. I don't know. Maybe it's just me. Like, can somebody maybe lean in a little here from the chat and tell me what you guys think of this inverse? I feel like maybe in this graphic we should include, maybe premium discount, obviously. Like, I'm not trying to be too harsh on it. This to me just looks like something I would never take. No, I got you. I got you. You wanted the 4 hour. Okay, so let's do worst case scenario stop out. Is this even 1R? I guess it's 1R. I mean, I guess, bro. I don't know. Yeah, to me, I wouldn't mind losing on this because it's just so high in premium. Like, okay, here's the thing. I just figured it out. This is something I actually remember mentioning in the one-on-one we had Ape off. Remember what I said about one of the only times I'd long in premium or short in discount? And I've said this before in PM too. Yeah, only if we have an A plus draw on liquidity, right? And if this is a B draw, am I ever gonna long in premium? No. So I guess that's the big thing, right? Yeah. So if you want to include that in your graphic or something, you can do that. The setup to the unfilled higher time frame draw here is B, but in all honesty, anytime that we have a gap in series like this and we fill the bottom gap, that in my opinion fills the whole gaps in series. Like we don't need to fill the top. The top of the gap doesn't really become a B draw in liquidity then. The only time that it's a B draw is when it's unfilled. So like this, for example, right? Singular. Well, there's two gaps here. The only gap that's a B draw in liquidity is this one before it gets filled, right? And then after that, this is no longer like a B draw, like in my opinion. Like I wouldn't treat this as a draw in liquidity. Now what I'd be looking at for a draw in liquidity is this high. Okay? And if we balance that, okay, now this is like what is it? A high inside of a gap. What would that be? B, I guess. Yes, exactly, Reese. Proximity definitely helps. But also time. So because this gap is so old and it's been balanced several times, it's not as strong of a draw. Okay? The older a gap is, the less good of a draw on liquidity it is most of the time. If it's still unfilled, it can be decent, but if it's been filled like once or twice and it's now like 3 days past when it first formed, it's not as good. Jacko, technically no, it's in all the rules that you can't, but there are more creative ways that you can hedge prop firms. I don't know how they would prove it, to be honest. I'm guessing if they were to try and prove it, they would just share data amongst one another, but I don't know. So the last for value gap in the leg is the strongest to hold price, but I wouldn't say it's usually like the best for draw and liquidity. I think usually the best for value gap to target as the draw and liquidity is the first, like the one that you're running into first, the first unfilled. And then after that, I would say it's like 50%. So if there's a gap that aligns with 50%, that's usually a good target. And then the worst draw, I think, is the last gap. The best draws in liquidity for fair value gaps are ones that you can pair with another liquidity pool. So if there's like equal highs that pair up to a unfilled fair value gap, those are good, really good, right? Like the other day, all those highs that we had stacked up in that same spot that aligned with that unfilled gap. Yes, exactly, ape off, exactly. Unless it's eval, then it's whatever. Yeah. Okay, for sure, ape off. Hmm. Could be like double E. Give that you came in bullish today, would you still take the short off of Opens Judas? Hmm. I don't think so. I think I would just look for longs after the Judas swing plays out. I would only look for shorts if we violated the 15-minute here. Because you're shorting into that 15-minute bullish gap. So no, I don't think I'd look for shorts. And this to me looks very bullish. I don't even like the bearish draws in liquidity here, so no, I wouldn't short. So the 30-second 1344 would be bad just because of the IPG size, not obvious for a beat draw. And you know, obviously in premium. Or do you mean the short? Yeah, the short isn't good there because the gap is too small. Yeah, we were rejecting an hourly to the left here, but we were also respecting this bullish gap. So I'm going to be focusing on the buy side of the curve here where I see this getting put in. I'm going to be looking at the reaction to price taking liquidity. And then I'm going to be looking at what fair value gaps is price respecting right now and which are we disrespecting. So at the present moment with this higher time frame move, we're disrespecting bearish and respecting bullish. So in order for me to see an order flow shift here, I would need to see price start to disrespect bullish. Simply because we're tapping into a higher time frame bullish, I mean bearish gap to the left, doesn't necessarily mean that order flow is bearish or even neutral. The only time that that happens is when price starts to disrespect the bullish PD raise. And until that happens, we're not bearish, right? Because order flow is both. It's not just respecting bearish PD raise, it's also disrespecting bullish. That's the key. So that's the reason why I wouldn't be looking for shorts here, because we're not disrespecting bullish PD raise yet. Same with 4 hour, right? Remember, guys, that's the key. If we're not disrespecting bullish PD raise, then there's no reason to think that we're bearish or we have bearish order flow. Like here, for example, oh, we're inside this 4 hour to the left. What if we reject? What if we do? And we run into this 5 minute, and then we hold this. Are we bearish? No, right? We're still respecting bullish order flow. We're not disrespecting it, so we're not bearish yet. And the only time that you can look to take a reversal play before order flow has been established is if we take liquidity. Okay? If we sweep external liquidity. If we don't, then you shouldn't expect price to reverse because price wants to go to external and then to internal and then to external, then to internal, whatever, you know. The 4, the 5 minute, all of it. Trade boy. No, no, no. Even on death slash birth candles, those are usually stop run candles. If we're in like a bullish trend and we don't violate bullish or bearish order flow, the thing is liquidity. We want to take liquidity first. So like here, the key to this morning would have been to monitor price taking liquidity at this low. And if we fail to like really get a good bearish move past it, then that tells us that we're probably not going to become bearish, especially if we can't even violate this 15 minute. Jacko, I have no idea. Presently, no. If we death candle and violate the 5 minute here, then yeah, that'll be our short. And for this short scenario here, we would need to have taken liquidity here, okay, and then gotten a bearish reaction. But because the reaction here was bullish, order flow is still bullish, okay? So here, this is when price would have became neutral, okay? And if we would have reversed at 11 here, or 10 even, okay, then we could have had a conversation about becoming short, and we wouldn't have needed to violate this gap here that we formed, this 1 hour, whatever it is. But because price failed to have a bearish reaction, right, and we just continue to move up and we broke structure and whatever, then like that still means we're bullish. Yeah, the Judas was, I wouldn't say this is perfect LRLR for the Judas swing, to be completely honest. If you mean the long, yeah, that's decent, but this still isn't perfect LRLR. It's like a lot of stacked highs. This to me isn't the Judas swing. I don't know what this is. This is just manipulation. This is just whatever. This right here is a Judas swing, I think. The false move before hitting higher. Typically, price will reverse and create our Judas swing, and then we'll see price like actually go in the direction it wants to during the macro. That's what we'll take liquidity. We'll use the macro to take price to whichever liquidity it wants to target, which in this case was this high. And that happened, I guess, later, but we took previous day high first, which I guess was the first target for liquidity here. And that was just outside the macro. I would wait for every time frame here, simply because we're in a bullish trend day and the price conditions are very good. But you're still targeting like a C draw on liquidity here, so it would have to be like very A plus of a setup. It'd have to be during the macro. It would have to have good momentum. It would have to inverse every time frame. And yeah, it would just have to be the most perfect setup ever if we're going to take it. You said something about violating the 10 or 11. Sorry. What I think I was saying was in order to expect price to become bearish, we should not have violated the highs here. Like we shouldn't have broken structure past it. If price was to become neutral, we should have souped. We should have gotten like a bearish reaction after that, and then that would have made price become bearish. But because we broke structure, that's price's way of saying, okay, we're gonna remain bullish here. And then if we pull back and we IO fed the bullish gap, that's price's way of saying, okay, we're really bullish here. Um, yeah, I think we're gonna fill all this. MM. This bullish leg to become bearish MM, the first thing I need to see inverse is this. These gaps breaking. And then I would be bearish to this low. And then after that, I would need to see price break this 15 minute. And then if we break this 15 minute, I'd be bearish to this low. Okay? If we break this 5 minute and go to this low and then hold this 15 minute, I'm still not bearish to this gap yet. Oh, in AM? Okay, so like let's say price hits this high, okay? We have a big bullish leg up here, okay? What I would need to see in order to become bearish would be, oh wow, this is kind of moving. What I would need to see in order to become bearish this morning would be price to violate like I think all three of these, or have really bearish momentum, and then like in order to take an entry, I would need a confirmation setup. So like imagine we take the high, get a bearish reaction at the high, like from up here, and then like we just like death candle, and then we get like a short retracement, and then we get like a 30-second, and then we get that. Or like this 15-minute breaking. If we broke this 15-minute to the downside here, we could then go break even at this next gap. So you enter here and then go break even here on like the lower time frame, let's say. Okay? And then that would mean I'm bearish to this gap. There's also a 30 minutes. So I don't know. It would have had the timing would have had to been really good. It's just the timing was off. Honestly, I don't see price ever becoming bearish here because of how bullish past the liquidity we were. Typically, if we're going to become bearish, we're not going to hit liquidity and pump past it and get like break a structure like that. Wow, Ash. Tail, shadow, track, hound. Hmm. Fair, honest, square, book. Ooh, one away. Sporting, duh. What am I doing? Bang. Has anybody been buying iBit with me? I'm gonna leave here now. See you tomorrow. Yes, of course, MM. I will catch you tomorrow. You're doing the wheel on iBit? Okay. How was that going? Is that one option strategy where um you like have 100 shares of whatever you're trading and you just sell like you just like basically continue to sell longer dated option strikes and just collect the premiums while having like the initial position. And then if the premiums get exercised, then you get covered and it just adds to your position. Or am I wrong? Am I thinking of like selling covered calls or that going? Let me think. I don't remember exactly. You're just selling theta, right? Yeah, selling cash secured puts. That's what it was. Yeah, yeah, yeah. Okay, that's what I thought. Dude, I should do that. Let me get 100 shares real quick and start doing that. If I have 100 shares, I can do it, right? I think I have like 70 shares. No, Apuff, he's just talking about a passive income strategy where you basically sell cash secured puts because you expect the price of a stock, or in this case, it's a ETF, to go higher. And then if the stock or ETF falls below your strike, you get assigned at whatever your strike was. And if it stays above your strike, then you get to collect the premium for however long you bought the option for. So if it's like a 3 month long contract, you can collect the premium of whatever option you're selling. Usually, I think iBit is only like 50 cents per share, I think, or something. But it just depends on how far out of the money you buy them, or how far in the money. Could I read the 5 minute long that I took at 1:30 in the morning? Oh, I already rated that A plus, Braden. That was a nice trade. That's funny that you asked that. The other person that was in here that was asking about it that said they faded it just left. Yeah, good call, man. I didn't trade today either. I tried a 1 minute short right now that just got break even with the SMT here. And I'm watching this 5 minute gap to see if it breaks. In a cash secured put, you typically want to get assigned, right? You don't want to close position. Unless like the closing the position would actually be cheaper than getting assigned, right? Okay, I got you. Yeah, let's do this. I probably won't do it today just because Bitcoin's already up 7.5% today or 8% today, and I know that. I mean, if it doesn't pull back, big deal. You know, I'm still in the position. If it does pull back, I'll probably get a better entry price. You know, I still lead by that same mindset if I don't want to buy too high in premium or short too low in discount. This would be like buying. Yeah, sell puts on red days exactly. Oh, thank you. No, I will be streaming tomorrow. I'll be streaming AM and PM tomorrow, Demo. Oh, cool. Awesome. Well, happy early birthday, man. All right. Let's do house real quick. Louisiana. PM lately has been better. There have definitely been better days for PM. 400K? Yeah, I don't think so. I'm gonna guess. No, that's good. for sure, Daniel. Too low. New Orleans. Okay, well, I would guess for New Orleans, probably 3 mil. Too high. Okay. 4,900. Maybe like 155. Too low. Okay. Maybe like 225. Okay, too high. Okay, what do we think? Like 1.7? Okay. So 2? Ooh! I almost got it. 2 mil. All right, Del Mar, CA. Del Mar, California. 550? Definitely not 550. Here's Del Mar. We are a little bit outside of San Diego. It's pretty much on the way to LA. Basically right outside San Diego. This is like the not so nice part of San Diego, right? So this is actually the nicer part, right? So do we want to guess like 1.5 to start? I like that. It's higher than 1.5. Okay. Well, I believe this is. I don't know where it is actually. Oh. It says it's right here. It's in the historical district, so maybe it's like. I think it could be like 3. It's more than 3. Not much more than 3. Maybe 3.8. Okay. 3.6. Dude, this is 7,000 square feet. Oh no, it's a lot. It's a lot. Okay. 2 bed, two bath for 3.6. Very close to the beach. That's why. Ever since Top Step updated their payout rules, their payouts have dropped to the lowest since April of 25. February had half the payouts as January did, and January had half the payouts as December did. By the way, guys, I don't think Apex is that good anymore. I would only recommend them after going through all the other firms first when you're trying to scale up to 20 accounts. Every other firm is better. ICT just said he's moving to Forex. Okay. Yeah. I mean, it's not great. I just don't think that the pricing is worth what you get. I used to make fun of the Top Step accounts all the time because they were like $50 for 2K drawdown. You could only request, but at least you could be able to request a lot. And then you had to pay so much money to get the activation fee, or you can pay like $70, $80 for a Lucid account and get a payout that's $500 more than the 50K on Apex. Like the only reason why you buy those accounts first is if you're like still scaling, or you just like they're cheaper at the time and you're okay with paying the activation fee. But like I feel like for most traders that are more experienced and are just trying to like start out with like scaling prop firm accounts, it's just not the firm to start with. Like Lucid is clearly the best firm to start with and then go from there, just based on price and the fact that you don't have to pay a monthly fee and the fact that there's no activation fee and that you actually get good payouts and the payout rules are, decent and there's no consistency on funded. I don't know, just dude, this is just straight chopping. It's been chopping since PM started. We've been stuck in a 40-point range. I don't know how to trade this. How do you cancel your apexes? You can't. I mean, you can. You just have to go to their website, but I would just trade them out until they're gone. But yeah, we got 10 more minutes till 3 o'clock. I think the 50Ks are the best, Jacko. 50K flexes. Let's just start buying here, selling here. What do we think? Is that the strat? You're gonna gamble, Jacko? Okay. Did you mention on our one-on-one about the premium discount thing for B Target? I've always talked about premium and discount. I don't know if it came up in our one-on-one. I can't recall, but I feel like that's something I've always mentioned. I mean, the importance of premium and discount. No, you weren't a bad student. If anything, I was a bad teacher. You never blame the student for their outcomes. But now we know. Yeah. Yeah, that's fine, 8 buff. Yeah, that's fine. All right, we got 3 minutes till 3. What am I looking to have happen? Nothing. There's nothing here. We're just consolidating. Condition here is the 5 minute, yeah. Well, if you longed in the bottom 25% of the range, you should go break even when we hit CE again. And then you should take profit when we hit the top 25% of the range. This is what I'm resorting to. I didn't do anything today, Seb. I'm actually happy about that. Yeah, ape off. Yeah, if it break evens at the exact price you entered, yeah, it'll track it. Guys, I'm printing. But yeah, I feel like the first hour of stream actually went pretty good regarding questions and that kind of thing. Do you guys have anything else that you want to touch on? No, I don't. I don't agree, Trade Boy. I mean, the markets are cyclical. This is just normal. It depends how close, Nathan. The break even, the original break even is to the new swing low. If they're very close, I would just probably take it, take the break even at the new swing low. If they're further apart and it has like a lot of momentum, I'd probably wait. But yeah, if we like create like relative equal lows and price comes down and runs out the one low but not the other, I'd go break even. Because you want to see price run that low immediately anyway. Have we taken anything? No. Yeah, exactly, Todd. You got to think in terms of years and decades when we're trading, right, guys? We're talking about years of like profitability. There's going to be years when you do super well, years when you lose, years when you struggle, and if that's not something that you can handle, then obviously that's going to make trading more difficult. A few bad weeks, a few bad months. I mean, that's normal. 'Ooh, death candle. 2 more minutes till the 5 closes. Maybe we get the wick for 3:30. Am I still in my long? No, I was never in a long. I was just joking. You really thought I was gonna like actually long, whatever it was. You real bro, come on. When have I ever taken a play like that? That's not even ICT. Come on. Am I taking the 5 or looking for a continuation? I'll take the 5. With like, well, actually, how big is the stop? If the stop is too big, I'll wait for continuation. Stop is like, the stop isn't great. Honestly, I'm probably not even gonna take the 5, but I don't know what I would rate this, like an A minus setup, I guess. I don't even think we'll get it. Yeah, so no 5 minute. Looks like we're gonna have to wait. If you want to force a setup, the soonest you could take this trade would be like in 2 minutes when the 2 and 3 close. If you don't want to wait for the 5, just like yesterday, we didn't wait for the 5. It ended up respecting, and we ended up losing the trade. One hour unfilled lunch lows. Yeah, that would be the idea. For the 3 minute, you need to close below that. 2 minute, pretty much same thing. 4 minute will close as well. And the last thing will be the 5. So there's the 4, the 3, and the 2 all closing below. Still waiting on the 5. Um, I think this would be like at most singular funded, probably closer to an eval play. Lobster. We got 1 more minute till the 5 minute closes. Momentum kind of stalling here, giving us, I guess, time to close before hitting the low. All right, there's the close. I am in this on accounts I do not care about. My take profit for this will be the 4 hour. Or the 1 hour, sorry, whatever it is. All right, I'm gonna go break even there, I guess. The break even at the swing low might be too early, but I it's where you're supposed to go break even, so I'm just doing it. I'm just gonna follow the rules of the model. I'm not trying to like, break rules right now. Not in these price conditions. I mean, if you want to wait until this low gets tagged, you can. But I'm good. I'm still in this. And still in this. And break even there. Nice. So top ticked, break even. Now it can dump, of course. My thought process on targeting that 1 hour gap is simply if I need to target something that's 1 hour away, I'd rather make the whole setup just worth my time at that point. And I don't think that trying to target lunch lows is a good enough draw. And I feel like if we go down the lunch lows, we'll probably go down to the 1 hour here anyway. Did I take anything in AM? I did not. This doesn't really look bullish to me. Hmm. Yeah, Kiki, I haven't been in love with Bryce. Well, there's like that one low I said you could go break even at. Need to see this 15-minute break, don't forget. Yeah, I mean, just come right to my break even and just stop after. I can't get like just any death candle through the low. That sucks. Oh well. We have 7 minutes until this next 15-minute candle forms, and that'll kind of tell us whether or not we're going to that unfilled 1 hour gap. Because if we break that 15-minute, there's nothing in between there and price to prevent us from getting that low. All right, we got 5 more minutes. Oh, about the 5 minute? Yeah, so the 5 minute breaking down there tells us, okay, order flow is bearish to this low, and then now we're just seeing if this 15-minute wants to break. Yeah, the death candle, the momentum, yes. Yeah. Am I still in? No, I got knocked out. If a confirmation setup happens, we would need to see the confirmation setup form in premium for a short. So if I was to draw premium and discount here, I'd probably draw it from this high down to this low. So as long as we're up here, you can still take a confirmation setup short. Yeah, exactly. Yeah, this would make us bearish to the low here, MM. So we got 2.5 minutes now. No, I wouldn't say sweep PM high again. If we retrace, let's say, to balance this 15-minute gap that we're putting in at 3:30, and we tap that and we get a confirmation setup off that, that would be good enough. I wouldn't say we would need the sweep there. We just need premium discount. I think that's the biggest thing. We don't really need the sweep. I mean, it definitely helps, and we will be sweeping liquidity here this high, whatever. But it's just premium discount. That was the thing that we were missing. Looks like it would have been a break even regardless, so no FOMO. Doesn't really seem bearish. So I guess we'll take a look at this 15-minute now that's forming. If we don't immediately reject it with like an IOFED reaction, then I think we'll be bullish. Or just like chopped. So there is the 15-minute gap. We failed to tap the 15-minute. We did maybe tap it on ES, maybe. Yeah, we did. Okay. All right, guys. I think this is going nowhere fast. So I'm probably gonna wrap up here early today. I'll be on tomorrow for AM and PM. I'll catch y'all then. I mean, if something shows up, I guess I'll alert it in PM chat. So stay tuned for that. But I don't think we're gonna get anything. So I'll catch y'all later. Have a good night. Peace out.